This is probably what you all have been waiting for. Drumroll please. Using the Elliott wave theory in Forex trading as an Elliott wave trader, you will be spotting wave counts. This means that you will be labeling the waves to see how they conform to the Elliott wave pattern to try and anticipate future price movement. In this section, we will look at some setups and apply our knowledge of Elliott wave to determine entry, stop loss, and exit points. Surf's up hypothetical will most probably be right. Scenario number 1. Let's say you wanted to begin your wave count. You see that price seems to have bottomed out and has begun a new move upwards. Using your knowledge of Elliott wave, you label this move up as wave 1 and the retracement as wave 2. In order to find a good entry point, you head back to the school of Popsology to find out which of the 3 cardinal rules and guidelines you could apply. Here's what you found out. Rule number 2. Wave 2 can never go beyond the start of wave 1. Waves 2 and 4 frequently bounce off Fibonacci retracement levels. So, using your superior Elliott wave trading skills, you decide to pop the Fibonacci tool to see if the price is at a fib level. Holy mama, price is just chillin' like ice cream fillin' around the 50% level. This could be the start of wave 3, which is a very strong buy signal. Since you're a smart Forex trader, you also take your stop into consideration. Cardinal rule number 2 states that wave 2 can never go beyond the start of wave 1. So you set your stop below the former lows. If the price retraces more than 100% of wave 1, then your wave count is wrong. Your Elliott wave analysis paid off, and you caught a huge upward move. You go to Las Vegas or Macau, overconfident that everything you touch is a winner, blow all your Forex profits on roulette, and end right back where you started. There are no Elliott waves in a casino. Lucky for you, we have another hypothetical scenario where you can earn imaginary money again. Scenario 2. This time, let's use your knowledge on corrective wave patterns to grab those pips. While you begin counting the waves on a downtrend, and you notice that the ABC corrective waves are moving sideways. Is this a flat formation in the works? This means that price may just begin a new impulse wave once wave C ends. Trusting your Elliott wave skills, you go ahead and sell at the market price in hopes of catching a new impulse wave. While you place your stop just a couple of pips above the start of wave 4 just in case your wave count is wrong. Because we like happy endings, your trade idea based on the Elliott wave theory works out and nets you a couple of thousand pips on this day, which is not always the case. While you have also learned your lesson this time around, so you skip Vegas and decide to use your profits to grow your Forex trading capital instead.